Did you know that you can invest in OpenAI's ChatGPT directly, meaning you can buy shares of the company even though it's private? Most people assume that since OpenAI is still privately held, you'd have to wait until the company goes public or is acquired by a publicly traded company before you can invest in it. Wrong. There's actually a way to buy shares of OpenAI today via a website called Disruptor. Disruptor is a platform that allows investors to buy shares of private companies through special purpose vehicles. Having successfully exited investments in companies like Palantir, Coursera, and Airbnb, Disruptor currently has Stripe, Masterclass, Klarna, Chime, and others in their portfolio. While the opportunity to invest in companies already held in their portfolio has passed, there are multiple current offerings to choose from. Some of their current offerings include SpaceX, Discord, Plaid, Canva, and of course, OpenAI. In order to invest in OpenAI, you need to invest a minimum of $10,000. They previously closed a round of funding in which the minimum investment was $1,000. As of the recording of this video, they announced that this round of investment will be the last call, meaning it will likely be closing very soon. Now, Disruptor isn't affiliated with our channel, nor are they sponsoring this video, so be sure to do your own due diligence and research any potential investment in their offerings. The one catch that we were able to gather from Disruptor's fine print is that in order to invest in their offerings, you must be an accredited investor. What this means is that you must meet certain wealth and income qualifications, usually having income of over $200,000 individually and at least $1 million in net worth, excluding your primary residence, will get you past the threshold. If you meet the criteria and have an extra $10,000 laying around, this might be worth some deeper research while they are still accepting new investors. We'll assume that most people watching this video aren't yet accredited investors, and if that's you, it's quite alright, you've come to the right place. Until we're able to invest in OpenAI traditionally through the stock market, we'll take a look at the best AI stocks to buy right now, and there are plenty of great picks to choose from. In our last video, we discussed the latest developments in ChatGPT and how the AI revolution is changing investing forever. According to Allied Market Research, we've barely begun to scratch the surface of what the global AI market will look like. By 2030, they estimate that the artificial intelligence industry will be valued at over $1.5 trillion, nearly 10 times what it is today. It doesn't take a Wall Street analyst then to decipher that AI will be one of the biggest sectors to invest in over the next 10 years. Since ChatGPT's launch, several little-known AI stocks have seen a rise in investor interest. Companies like C3.ai and SoundHound AI have seen the value of their shares rise by upwards of 50, 80, and even 100% in just a handful of months. A lot of people are buying into the sector broadly, without fully understanding the implications of artificial intelligence, and that not all AI is created equal. While some of the lesser-known AI names have rallied as of late, the wiser play would be to look at the well-capitalized companies that are building AI infrastructure. The first such company we'll look at is a great example of this, NVIDIA. NVIDIA, the 7th largest publicly traded US company by market cap, is a company that got its start in the graphics chip business for PCs by helping video games look more realistic. They also made waves in the cryptocurrency space as its chips were used for mining. Now, the next push comes from generative AI. Since the onset of deep learning, NVIDIA has dominated the AI chip market with its graphics processing units, or GPUs. One of the advantages of using these graphics cards for complex computing tasks is that multiple GPUs can be installed in a single computer, leading to highly efficient processing for the computer system. This is especially the case for applications in artificial intelligence, making NVIDIA's GPUs a valuable resource. Deploying large quantities of high-performance GPUs helps to shorten training time for generative AI, which requires mining through substantial amounts of data. Therefore, when it comes to chips used for training AI, GPUs are the key ingredient. NVIDIA's CEO Jensen Huang recently said that AI adoption is at an inflection point, adding that NVIDIA AI is essentially the operating system of AI systems today. This is a clear indication of solid growth opportunities as more enterprises develop and deploy AI strategies. Currently, AI computing infrastructure is concentrated in the hands of NVIDIA. The company controls about 80% of the market for graphic processing units. According to a statement from NVIDIA, the number of GPUs needed for the commercialization of the GPT model, or ChatGPT, is projected to reach above 30,000. This is expected to boost the use of NVIDIA's H100 and A100 chips tremendously. They estimate that executing 100 million ChatGPT queries per day would require annual purchases of $1 to $2 billion of GPUs. While the growing buzz around AI chips could act as a significant tailwind for Nvidia, there are other chip makers that fare to benefit from the AI boom as well. The differentiator is that Nvidia has already taken the lead in this space. Advanced CPUs and GPUs from leading developers Intel, AMD, and Nvidia are widely used among AI cloud service providers worldwide. Advanced Micro Devices (AMD) is the second biggest player in the GPU industry, with a market share of roughly 20%, and OpenAI listed Intel as a chip maker currently utilizing their API. However, Intel has been losing CPU market share to AMD in the data center and PC industries it once dominated, and they now risk losing out on the next phase of growth. Nvidia is about 5 times larger than Intel in terms of market cap, and Nvidia's GPUs are designed to handle the specific kind of math involved in AI computing very efficiently, while Intel CPUs can handle a broad range of computing tasks but with less efficiency. In recent months, Intel has made efforts to sharpen its focus on GPUs. In December, they decided to split their graphic chips unit into two, one focused on personal computers and the other working on data centers and AI. Still, analysts say the company has a long way to go before Intel can make a dent in the market. As the artificial intelligence boom takes off, multiple chip makers are in position to benefit, but Nvidia Corp is expected to emerge as the biggest winner among them all. The solid growth opportunity around AI chips and its dominant positioning in the category make it the most promising stock. Having a significantly higher market cap in comparison to its competitors also helps. Our next AI stock is similarly well established, Microsoft. In our last video, we discussed Microsoft's early investment in OpenAI and its plans to integrate ChatGPT into their current product offerings. We've seen Bing's new ChatGPT-powered chatbot and heard the rumors of Microsoft Office programs adding AI tools as well. Seeing that the relationship between Microsoft and OpenAI runs deep, it's no wonder that Microsoft is poised to be one of the leaders in artificial intelligence for the foreseeable future. The tech giant has invested billions in the AI research firm and given it open access to Microsoft Azure, making Azure the exclusive cloud provider for every OpenAI tool. In this competitive landscape, companies are seeking for ways to optimize their business operations through machine learning. Being able to use ChatGPT to ask questions and get answers directly in the Microsoft Word app could cut Google search out of the workflow equation, speeding up the turnaround time for written projects. And though Microsoft's search engine, Bing, isn't nearly as popular as Google's, Bing's new chatbot feature provides much needed competition in the space that could impact how the average person interacts with the web. Having the capital to create and fund this partnership as leverage is key for Microsoft to ensure that they are in pole position for using this technology. One of their main competitors, Google, is also a top AI stock that you should consider adding. While they seem to obviously lag behind Microsoft in the race to utilize ChatGPT-type tools, it isn't hard to imagine why artificial intelligence is a top priority for Google. Google is already one of the most innovative companies when it comes to AI, using machine learning to improve search suggestions in both Google Search and YouTube Search. They also utilize AI to help organize and make suggestions about our large collections of pictures in Google Photos, and to categorize emails in our Gmail inbox. With some of the premier global engineering talent and a specialized artificial intelligence division, Google's engineers combined with Google's on-hand capital are poised to take advantage of AI's newest technologies and become one of the dominant forces in the industry. The same could also be said for Meta. Formerly known as Facebook, Meta has rebranded as its focus has shifted to AI and the metaverse of the future. Meta is revamping its AI unit to integrate their generative technology into their products more quickly. In the rush to add generative AI to their products, Meta's new product team will be headed by Ahmad Al-Dal, who spent over a decade as part of Apple's Special Products Group. According to Meta founder Mark Zuckerberg, the company is working on AI experiences with text for Messenger and WhatsApp, experiences with images for things like creative Instagram filters and ad formats, and video and multimodal experiences. Zuckerberg says that, in the short term, they'll focus on building creative and expressive tools. Over the long term, they'll focus on developing AI personas that can help people in a variety of ways. He adds, "We have a lot of foundational work to do before getting to the really futuristic experiences, but I'm excited about all of the new things we'll build along the way." This announcement comes after Zuckerberg announced the launch of a new state-of-the-art AI large language model called Llama, short for Large Language Model Meta AI. This model was designed to help engineers explore applications for AI, such as answering questions and summarizing documents. Upon sharing the news, Wall Street became bullish on Meta's AI capabilities, causing Meta shares to jump. Morgan Stanley is also calling Meta's rumoured chatbot service for messaging apps a $6 trillion opportunity. Before we move on, if you're learning anything from this video so far, please drop us a like and subscribe to see more content like this. Now, let's look at our next pick. Since we've already mentioned Apple, it's important to highlight their presence in the AI space and why they also make our list of top AI stocks. Apple has been utilizing AI for over a decade. Siri, Apple's virtual assistant feature, might have been Apple's first mainstream application of AI, but it's definitely not the only one. The introduction of facial recognition in the iPhone X is one of the more well-known uses of artificial intelligence in Apple products. Recently, Apple made news for blocking the latest version of a ChatGPT-powered app on its App Store. The iOS Mail app's ability to generate text using ChatGPT was a cause for concern for Apple, since the app didn't include proper content filtering that could prevent problematic text output. While Apple pumped the brakes on this particular application, don't underestimate Apple's stance on leading innovation in artificial intelligence. The company is already using AI to successfully monitor crash detection, fall detection, and ECG in its Apple Watch. To this point, it's likely that Apple will continue to adopt AI as features in their products and services, rather than build standalone AI-based products. Speaking during the Q1 2023 earnings call, Apple CEO Tim Cook said, "AI is obviously a horizontal technology, and so it will affect every product and every service that we have. It would make sense then that we begin to see system updates that increasingly support artificial intelligence features. Most exciting, perhaps, is the highly anticipated Apple Car, rumoured to release in 2026. Early reports stated that Apple was aiming for a fully autonomous design in the Apple Car, one without a steering wheel or pedals. However, more recent news suggests that Apple will skip fully autonomous driving at launch to prioritise getting the vehicle to market. While on the topic of vehicles, we can't forget about Tesla's presence in the AI space. Tesla has been hosting events called AI Day for years now. The company has been attracting the best talent in the field of AI to help make improvements to their autonomous driving features. While this innovation is one that tech companies like Apple and traditional motor companies like Ford and Honda are beginning to explore, autonomous driving is already existent within Tesla's product offerings. Tesla has also been creating humanoid robots to be used for functional purposes, doing anything that humans don't want to do. It shouldn't come as a surprise that Elon Musk is thinking out the box when it comes to AI integration, given his ambitious vision and investment history. After all, he was an early investor in OpenAI and praised ChatGPT's power once it went public. Since Microsoft's most recent investment in OpenAI, Musk has changed his stance, distancing himself from the company. In a tweet, he wrote that OpenAI no longer resembled the firm he invested in. OpenAI was created as an open source, which is why I named it OpenAI, non-profit company to serve as a counterweight to Google, he said. But now it has become a closed source maximum profit company effectively controlled by Microsoft. Not what I intended at all. The relationship with Elon Musk and OpenAI is still evolving, but his exploration into the world of artificial intelligence is unwavering. Understanding that not all AI is created equal, we can see that buying into AI broadly might not be the most efficient strategy. In the not so distant future, most brands will integrate advanced AI tools into their processes, so it doesn't make much sense to lay indiscriminate bets across the sector simply because there may be a connection to AI. If you're looking to invest in AI, the best potential is in the companies providing infrastructure. In short, the tech giants are most likely to benefit from the AI boom. A few of the largest companies in this space, specifically Google, Amazon, and Microsoft, are top providers of cloud computing services. These services are critical to AI tools that require access to large amounts of data and need maximum efficiency and security for that information. FAANG stocks have dominated tech for the last decade. For those who don't know, FAANG stands for Facebook, Amazon, Apple, Netflix, and Google. Looking ahead, some of these same companies will set the pace for the AI market, also including Microsoft, Tesla, etc. On top of having the infrastructure, these companies have the capital to acquire and compete with smaller AI firms that are sure to rise over the next decade. Looking at Meta, formerly Facebook, Instagram was acquired by Facebook. Instagram then integrated a stories feature copying Snapchat. Instagram now has Reels to mimic TikTok. Facebook Marketplace is based off of Craigslist, Facebook Dating mirrors apps like Tinder, and now Instagram is selling a verification feature similar to Twitter's. The fact of the matter is that big tech has the ability to acquire or copy and with the backing of the best engineers in the world, they can do so relatively quickly. As we continue our series, we'll be diving deeper into Tesla and the strategic plan the company is currently rolling out. We've covered a lot of information here, so if you've made it to the end of this video, leave us a comment with your biggest takeaway and which company's future intrigues you the most. Also, make sure to subscribe to the channel and turn on notifications so you can be in the know on the latest happenings in finance, technology, and the AI race. As always, thanks for watching, and we'll see you in the next video.